We all know one of the main issues on this stock, okay? Besides short sellers going on dark pools and shorting AMC stock from pretty much wherever they can, ETF, I mean, you name it. But besides that, we also have the fact that our orders never or barely even see the lead market. And I don't know exactly why at this point the FBI or the SEC have not seized assets of whoever, or brokerage firms or market makers or wholesalers, because this is freaking criminal. And this is exactly the reason why in Australia, in the UK, and in Canada, this practice of payment for order flow is forbidden. I know this is the land of capitalism, but man, this is really at the total opposite of the entire idea of capitalism. So I want to share in this video, guys, that Australia is now looking into making even more tighter, even more tough restrictions around payment for order flow, because exactly on precisely of what is happening with retail investing around GameStop and AMC here in the US. I mean, news came out today. Australian regulator waits further payment for order flow restrictions. Further restrictions for payment for order flow. So just the title tells what's up. Because here in the US, we're not even looking at it as the way we should. And I think, SEC Gary Gensler and all the other guys from the DTCC and the NNCC and all the acronyms should really get a look at this, because it speaks volume, okay? If the other big stock exchanges besides the US, first of all, have forbidden these practices. And keep in mind, Citadel has been banned for multiple years in the past in China because of practicing naked shorts. So if all of these others huge markets are are banning something, it is for a reason. But why in the heck here in the US things are not also the same? Well, you know it: corruption, conflict of interest, and money. So they want to pretty much make sure that the practice of payment for order flow, which is involving retail brokers sending our customer orders to wholesale brokers rather than the exchanges, for slightly better execution price and accepting payments and rebates. So again, conflicts of interest. Now, the Australian Securities and Investment Commission, the ASIC as we call it, move comes on the back of the retail trading frenzy in the US that thrust online brokerage such as Robinhood Markets into the mainstream. There you go, guys. So they are really getting inspired. They are looking at what is happening here where we are and actually tightening their safeguards, their walls, because they see how damaging this can be and is for the market in general. Okay, so this practice of payment for order flow involves trade brokers. We already know that, but they are really, payment for order flow arrangements create conflicts of interest that can lead to poor client outcomes. Also, negatively impact market liquidity and pricing. Pretty much everything that needs to be in the market for the market to continue to exist and properly function. All right. So again, that speaks volume around what it's actually the issue here, because again, if outside of the US, pretty much every market is banning this and really trying to tighten even more based on what happened here, then SEC Gary Gensler, please take a look at this and please do something. Do something.